Hey Bowtie Nation, Joseph Hogue here with 7 stocks I'm following higher and higher. 3 of these stocks have already exceeded $100,000 in profits in my main portfolio. With 2 others, I expect to get there fast. In fact, I've made over $640,000 profit in just these 5 alone. I'm going to highlight each of these stocks, why I'm buying more, and what to look for in these 6-figure stock returns. Let's get right into it with one of my biggest gains so far, SoFi Technologies, ticker SOFI, a stock I started buying late 2022, just over $5 a share. I've followed it up over these last 2 years, building a 25,000 share position worth over $400,000 and up 167% from my average cost. And okay, before the troll brigade heads over to the comments, yes, I know that total gain is only a paper profit until I sell the stock, but I'm holding on here because, like I've been saying for the last 2 years, this will be a major bank. The bank continues to produce the kind of growth that we'll see in all of these stocks, growing members at a 35% pace over the last year. SoFi was one of the few banks that added members and deposits when everyone else was seeing deposits flights in that banking crisis. Lending product growth was 19% in the most recent quarter, and financial services rose 33%. And these are so important because it shows not only is SoFi able to bring on those new clients, it's also able to get them into that ecosystem of services, making it a one-stop bank. Remember, this all started. Why I started buying so aggressively is when SoFi was granted a national bank charter through its Golden Pacific acquisition back in 2022. That meant it was a legitimate bank that could collect deposits and offer services like checking. It was a hugely important step because, unlike other fintechs, it then had the ability to collect those low-cost deposits, then use that money to lend out, whereas those other non-bank fintechs, they have to get their funding from higher-cost debt or equity. It also means SoFi can offer services to create that one-stop banking experience. And that's taken revenue up 64% over the last 2 years, with earnings up 322%, with both still growing at a 30% annual pace. And I'll admit, while lately I have been worried about the valuation on this one. I mean, this stock is up 88% in the last year alone. The growth to a legitimate large bank is not over. SoFi's book value, the value of all its assets, and really the way you want to measure a bank stock, is around $5.53 a share right now, with this year's goals to have it grown by upwards of $1 billion, or about $1 per book value per share. Now, when I started buying the stock and said this was a no-brainer at a price of 0.85 times book value and was buying it hand over fist, it's now trading at almost 2.8 times book value, so yeah, kind of expensive. But this bank is still tiny by comparison. Consider something like Regions Financial with its book value of $17 billion. Now, Regions trades cheaper here at just 1.4 times book value, but then again, it's growing revenue at just 5% versus the 30% growth at SoFi. Or maybe Huntington Bancshares with its $18.2 billion book value, 3 times the book value of SoFi Technologies. So while shares of SoFi are expensive, and I don't recommend going all in right now, you can still add shares here to get that exposure and then more later, maybe at a lower price if the stock does come down, but over time as the bank grows. Next up was a controversial investment, but one that paid off in Super Microcomputer, ticker SMCI, now up $218,000 on a position worth over $633,000. And this one has been in less than 2 months. I highlighted the full case against SMCI by short seller Hindenburg on the 18th of last month, explaining why none of these allegations were any kind of existential risk, even if true, and likely they were just from a short seller trying to scare investors and make a fast buck. There were more than 250 comments on that video, and okay, half of them were bots because YouTube is lousy with them, but a lot of others said I was crazy to buy the stock, or later that it was just a lucky bet. But folks, that is not how real investing works. Now sure, you can follow the chart porn on other channels, getting googly eyes at how much a stock has gone up and investing only because it's gone up. Or you can spend a little more time, do the deep analysis, and follow the stocks that we cover here. Now I know the videos are a little longer, but would it have been worth it to spend 12 minutes, maybe another hour doing your own research, to make over $200,000 or 52% on your investment in less than a couple of months? I'm going to link to that previous video in the description below so we don't have to rehash everything here, but nothing has changed in this argument, and even after a 118% return in the last month, there is still an upside opportunity here. SMCI is the only pure play in that massive data center build-out theme, supplying server solutions with NVIDIA chips. You've got Dell and HPE reporting strong growth as well, but both of those are being held back by other segments in their business. SMCI grew revenue by more than 60% this year and is expected to grow another 20% next year to $30 billion, which is likely well under what they'll probably report. And this company has a path to $50 billion in revenue on its server and storage solutions. The stock jumped 30% earlier this month when not only did an independent investigation find no wrongdoing, but the company was also granted until February to file its late reports. In another video on the 9th, I used historical valuation multiples to show you a target range for the stock with a low of $40 and a price into the hundreds on the high side. Yes, this stock is going to be volatile, probably through February, but this one could still more than double from here. This next stock is one of my highest returns, but first, knowing which stocks to buy means staying up to date. And for that, I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, strategies, and trends you need to see. Each week before the market opens, I'll show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for that sign up link below. Back to our list of stocks to buy though, and another big one this year, SoundHound AI, ticker SOUN, which I started buying in February at under $4 a share. That was just before Nvidia announced that it held shares in the company with more than 1.7 million shares, worth $24 million. This stock has bounced higher and lower for months, but I held on and now am up over $107,000. That's up 164% from my average cost and in less than 11 months. And here, this isn't just the hype for all things AI. We were talking about the stock before it took off because it could be the biggest use case in artificial intelligence. The company makes voice AI assistants in more than 25 languages and has this year proved that it's leading in the space with some partnerships and major clients. It's a market estimated at $160 billion, but I think even that underestimates this potential. Besides that vote of confidence by Nvidia, the company's AI assistants are being used by car companies across Europe and have already been shown to drive a 20% bump in productivity at call centers. Revenue here grew at an 82% pace this year and is expected to nearly double next year, but that $164 million in sales is again tiny compared to what this could become. Just imagine if SoundHound captured just 5% of that $160 billion estimated market for AI assistants. That would be over $8 billion in sales. Now, of course, the stock won't be trading at 64 times its revenue in a more mature market, and as that growth slows down, but even at a valuation multiple of 3 times sales, that would mean a $24 billion company, more than 4 times larger than it is now. And to be honest, I don't think it gets there. I think before it reaches that full potential, another company steps in to buy it. At a $6 billion market cap, buying SoundHound would be like petty cash for a company like Apple or Meta Platforms, but it would make them the company for consumer or business AI assistants. Now, before that happens, and when it happens on that takeover price, investors could see another triple-digit return in this stock. We've still got 2 more stocks that aren't quite to 100,000 in my portfolio, but that could get there fast. But Nation, you know this channel isn't about just dropping a list of stocks in your lap and saying go buy these. I want to give you the tools you need to find these stocks yourself, to be a better investor and understand the stock market. Not just follow some YouTuber or buy a stock because it's been going up. And so finding these kinds of moonshot investments means looking for 3 factors. First, that revenue growth of 20% plus a year. That's because, folks, that 3% dividend on shares of Coca-Cola looks tempting, and the stock has done very well, producing a 10% annual price return over the last 40 years, but it will never make you rich like some of these growth stocks. Even on that solid 13% annual return, reinvesting the dividends, it will take you 30 years to reach $1 million portfolio, investing $250 a month. But then focusing on these growth stocks could cut that time to your $1 million portfolio in half, investing that same $250. And I know the Debbie Downers out there are going to say you can't make 20 or 30% a year on a stock for that long. But Google has done just that, producing a 20% annual return since its 2014 IPO. Meta Platforms has taken investors up 33% a year since its 2012 issue, and shares of Nvidia have boomed by an annualized rate of 39% a year over the last 20 years. But then here, it's not just about growth. You need a market size and an opportunity for the company to grow into. And those of you in the nation know this was my biggest job as a venture capital analyst, finding those pre-IPO stocks, some with valuations of just a few $100 million, but with a market that could take them into the tens of billions and more. And a great example of this is in that SoundHound analysis. With a potential market for AI assistants estimated at $160 billion in annual sales, even a fraction of that market would mean billions of dollars for SoundHound. It's a giant market opportunity and not well developed, so any company with an IP advantage can come in and capture a share of that market. And that brings us to the third factor in finding these stocks, that competitive advantage over their peers. This one is more difficult because it helps to have that professional experience in a company's industry to be able to compare the products, services, and the models for each company and find ones that have that advantage. You can build that experience through research, following the companies across the industry, or another way to do this is by following the revenue growth rates. For example, in this chart I'll show you again later, we're looking at the top 5 pure-play providers of cybersecurity service, and that revenue growth is a 2-year annualized figure. So comparing these, you have to ask yourself, why are CrowdStrike and Zscaler able to grow their revenue so much faster than the average, or peers like Fortinet? Now that alone is not a guarantee that these companies have some kind of a competitive advantage, but it is a clue, enough of a hint that you can research a little further to confirm whether these two are capturing more of the market, because they have that durable advantage and it's going to translate into continued sales growth and returns for investors. Back to our list though, and I'm a little embarrassed it took me so long to start buying shares of Shopify, ticker SHOP, which I finally stepped into May this year after a big drop post-earnings. And now in some of your expensive growth stocks like these, those pullbacks can be your best opportunities. Shopify plunged almost 25% in the week after its second quarter earnings, but looking into the stock, doing that research, I saw a company that dominates e-commerce. And that research paid off with a 94% return so far, up $38,000, with a long-term target that will get me to the $100,000 mark in this stock. Now, where Amazon is leading in the e-commerce market for its own website, Shopify helps businesses sell from their own sites and is a runaway leader in that market. Shopify controls 27% of the e-commerce market, well above its next competitor, WooCommerce, at just 19% share. And that's where I really didn't understand Shopify and why it took me so long to invest. I'd always assumed that the company was a competitor to Amazon in that online retail market, and nation, you don't fight the Bezos. But then actually researching the company, I saw that it was a leader in its own segment of that e-commerce market, website sales off Amazon. And that e-commerce market still has a lot of growth left, with online sales just 15% of the total retail in the United States and even lower globally. It's a fraction of the $404 billion addressable market just in Shopify's core geographies. And as that market leader, Shopify is going to continue to get the lion's shares of the growth. That market leadership, along with a growing market, has helped the company book 29% annualized growth in its recurring revenue, the best kind of revenue because it's sales Shopify can count on every month as it continues to add new customers. And you'd think after years of that growth, it'd be slowing down, but the company is expected to post 22% sales growth next year to almost $11 billion. And with that continued growth in the market and the company's advantage, that growth can continue year after year. Next, I'm going to highlight a stock in my favorite theme for the next decade. In fact, I've got 3 stocks in this one theme to make sure I touch all the bases. But I'm not the only one buying it. In fact, digging into the regulatory disclosures, I found Google parent Alphabet has invested more than $120 million in this one stock, along with billions in 39 other companies. Check out the video in the corner here to see the other stocks Google is buying, including some of those penny stocks that could mean big returns. I started buying CrowdStrike, ticker CRWD, earlier this year for that cybersecurity theme and started loading up the shares after its July outage that sent the stock tumbling. It's now rebounded 58% from that August low, and I'm up 31% on my average cost for a $26,000 profit. And those of you in the nation have heard me preach on this all year. That cybersecurity theme is my favorite big trend over the next decade at least. From a 20-fold increase in the number of malicious programs just since 2014 to the potential increase in cyber threats from artificial intelligence, cybersecurity is the one theme that is already producing profits along with revenue growth. I know everyone's gaga over AI stocks, quantum computing, and even fusion energy, but cybersecurity is paying off right now. And with growth in cybersecurity budgets for large companies, these stocks will continue to pay off. CrowdStrike has a strong competitive advantage in its Falcon platform for that one-stop protection that tops Gartner's quadrant for endpoint protection year after year. It's why even after that massive outage, I knew companies would keep coming back to CrowdStrike because its leadership and that technological edge in its protection. This is a very competitive industry though, so I'm not betting everything on just one company. Instead, following that mega trend of cybersecurity higher with 3 companies, Palo Alto Networks and Zscaler. Here I've updated some of my research into the 5 largest cybersecurity companies, detailing the revenue growth, profitability in that operating margin, and then valuation. Remember, with growth stocks like these, we want to adjust that price-to-earnings valuation by the growth to see a little truer picture of valuation. And of course, like everything in the market right now, these stocks are not the screaming buys they were last year or even earlier this year. Even adjusting for that 20% plus growth in some of these, the stocks are expensive, but that market for cybersecurity is booming, and even at these prices, these stocks can produce strong double-digit returns. I like Palo Alto here on its balance between growth, profitability, and valuation. Not the fastest growing, but strong profitability and a better price than most of the others. Zscaler and CrowdStrike are my growth plays here in the space. Relatively expensive, but That strongest revenue growth among the group tells me the companies have that competitive advantages that are going to be used to grab more market share that's going to translate into sales growth and a higher stock price. Stay up to date with the stock market news, trends, and strategies you need to see, all free with the weekly bow tie and the special invite link in the description below. Or click on the video to the right to see the stocks Google is buying right now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.